As the markets prepare for another trading day, United States stock futures are on the rise, buoyed by the latest earnings reports from major technology companies. Investors are keenly watching the performance of giants like Microsoft and Meta Platforms, which have made headlines for their significant investments in artificial intelligence. Despite some concerns stemming from a low-cost artificial intelligence model developed by a Chinese startup, executives at Microsoft and Meta are optimistic. They believe that increased spending on artificial intelligence is essential to maintaining competitiveness. In pre-market trading, the Dow futures have gained 162 points, while the Standard & Poor's 500 and Nasdaq are also showing positive movement. This uptick comes after a previous session where stocks dipped due to the Federal Reserve's decision to maintain interest rates. The Federal Reserve's choice to hold rates steady has led to a cautious market sentiment as officials adopt a wait-and-see approach regarding future monetary policy. Investors are now analyzing how this decision impacts the broader economic outlook. Amidst this backdrop, technology stocks faced pressure, with Nvidia seeing a decline of over 4%. The emergence of DeepSeek's artificial intelligence model has raised questions about the sustainability of heavy investments from American technology firms. Microsoft's chief executive officer, Satya Nadella, addressed these concerns, highlighting that artificial intelligence costs are decreasing. Meanwhile, Meta's Mark Zuckerberg emphasized that their capital expenditures are aimed at securing a strategic advantage in the long run. In extended trading, Microsoft shares fell after a disappointing outlook for its Azure cloud computing unit. Conversely, Meta's stock rose, buoyed by better-than-expected fourth-quarter revenue. Tesla also made headlines with its announcement to reduce costs and introduce a new, more affordable electric vehicle. This move is seen as a crucial strategy to stimulate demand amid declining deliveries. Chief Executive Officer Elon Musk has projected significant growth in vehicle sales, although this estimate was not reiterated in the latest earnings call. Tesla's commitment to slashing production costs is a vital step in maintaining its market position. As Tesla aims to launch its low-cost electric vehicle by 2025, the company has reported a drop in average construction costs, reflecting a trend towards more efficient manufacturing. However, analysts warn that this could impact profit margins. In addition to vehicle innovations, Musk stated that Tesla is set to begin testing a paid autonomous vehicle service in June. This move signals the company's commitment to integrating artificial intelligence into its future endeavors. Turning to Apple, the tech giant is anticipated to report its quarterly earnings later today. Analysts expect modest revenue growth, attributing this to intensified competition in the Chinese market. Apple has been gradually rolling out artificial intelligence features, but initial feedback on its new offerings has been lukewarm. Analysts are closely watching how these developments may affect iPhone sales. Despite the challenges posed by emerging competitors, Apple's exposure to DeepSeek's artificial intelligence model is relatively limited compared to its technology counterparts. This positioning may allow the company to navigate the evolving landscape with more agility. As Apple prepares to disclose its financials, the company has ramped up capital expenditures, although still less than its peers. This strategy reflects a cautious approach to maintaining growth without overextending resources. Meanwhile, the Federal Reserve's decision to hold interest rates steady has left many analysts pondering its implications. Chair Jerome Powell emphasized that the central bank is not in a hurry to adjust rates, citing stable employment and inflation readings. The Federal Reserve's current stance comes amid a backdrop of strong economic data and ongoing uncertainties. Observers are keen to see how future political decisions might influence monetary policy. As we shift our focus back to the markets, the European Central Bank is also expected to announce its own rate decisions soon. With economic activity in the Eurozone lagging, many anticipate a move to cut rates. As we wrap up our report, don't forget to like this video and hit the notification bell to stay updated on the latest market news and insights. Join us at StockInvest.us for more in-depth analysis.